Futures are a bit soft after January's historic rise. Can this rally be sustained through February? Will money continue to come out of bonds? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Rudd, the Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So with the Dow settling above 14,000 for the first time since 2007, futures are now off a few handles, Scott, this morning. So how are you approaching this week?
I think a lot of traders are just trying to stick with their portfolio approach. They're trying to stay with longs that are working. They're trying to, trade around positions. If you get some type of reset where you have a new pivot where it could be viable to trade it above. And I think also traders are trying not to hedge too much. I think like a lot of traders, including myself, even when we've had a big up day, we've been getting hurt a little bit by having the insurance of a hedge. So at this point, I think everyone's just trying to stay the course and figure out whether we get a pullback before the Dow makes all-time highs or the S&P tests theirs.
Right. So what are the key levels we should be watching in the S&P?
So if we go to the spiders first, we look here at the chart, you will see this stair-step approach that we've had since the beginning of the year. Here's your gap up to start the year, little digestion, which was healthy. Then we moved up, digested again, and then we were able to power through the previous pivot high of 148.11. And then, we got up near that 1500 level, which became, it's always hard to get above an obstacle first time or a psychological one. Closed on the 8th day, then with the jobs data on Friday, we powered through. So I would say if this type of approach continues, in order to keep, this stair step with no pullback, you would see the 8-day hold, which is at 150.25. Then you also have Friday's low, which is about, 150.40. But typically, into those support levels, it's been better to cover your hedge versus press it. Those pressing the hedge are actually losing more money. So at this point, I think, you add to stocks that are showing relative strength and keep just maneuvering the hedge, but add to it on extensions versus then on the pullback. And
now as earnings season starts to die down, where do you think the focus will be?
I think the bears are going to try and point to the sequester, that could happen, I think not till March, where they're going to start saying, if this, triggers, it could take a 0.5 percentage point off of GDP, which it probably could. But I think that it doesn't go down that way. I think there's also talk about Thursday. The ECB's having a policy meeting and the Euro's had a huge move. So there's some talk that they might, talk it down to try and get the Euro to correct a little bit, which could cause the dollar to go up, which then, stock prices usually come in a little bit. So I think the sequester and the ECB policy meeting Thursday is going to be, some reasons for some headlines.
All right, well, let's check the temperature across sectors, starting with transportation. The IYT is flagging at highs. So what level will markets next move higher?
Well, this has been just an unbelievable move. And, it's followed the 8th day, it's followed the 21-day. Anyone trying to be cute and short here, it hasn't worked. And if you look at the chart here, you will see that, on Friday it had some type of weird print, so to speak, right here, where it printed above the prior high and came below. I'm not sure if that's real. But here's a story here. This was that descending channel in the IYT. This was that long consolidation that could have paid you a nice amount of money if you bought this breakout. And since then, it's been following this 8th day, and it still looks pretty good.
And we've talked about the rally in the financials. The XLF hit a 52-week high and has stayed above the 8-day moving average for the last month. So what upside potential does the XLF have?
I think that it was healthy on Friday to see some money rotate back into Citigroup and Bank of America, because in the beginning of the month, a lot of us were focusing on the banks, and Bank of America, Citi had a big move with Morgan, with Goldman, and then those two have been basing while Goldman and Morgan have just continued. You look at the XLF here, you will see that it made a new high with the spiders. Some groups didn't, so it started to flex its muscles once again. Look at Goldman Sachs. It's been an unbelievable trade for a lot of people on a lot of different time frames, starting from here. Another gap up that continued to follow the 8-day powered through. Morgan Stanley also, looking good. And then finally, Citigroup, that's been basing ever since, this last little pullback, it looks like it's getting back in motion. So this is the type of trade that traders like because it's calculated, it's tight. So if you add it to your Citigroup on Friday, it starts getting above 43.20. It can continue the same way with Bank of America. That has been a nice trade since 995. If you took some off, now's the level it starts getting interesting again. So above 1175-ish, you could see the old highs there on Bank of America.
And the industrial ETF, the XLI, has been acting very well. It's currently flagging at highs. So does it look compelling to you at this upper level?
I think what's kind of interesting is, we always look for where money rotates, and I just showed you the XLF where it was at highs. If you look at the industrials, I don't think it's that big of a deal, but if you look at the chart, it didn't make new highs. So maybe it needs more time. A lot of these stocks have had really big moves. They perhaps need more basing activity. So you saw the XLF make new highs, XLI right in line here. So I think, this is worthy of watching, and the stocks within that group look good, but at this point, it could, I would say, pause a little bit more where the banks could be in motion.
And tech has been a bit of a mixed bag, and we see the cubes has been lacking momentum, kind of lagging here. So what level does it need to break above to pick that momentum back up?
There's a lot of talk that the Qs really haven't been lagging, because if you take Apple out, it would be at highs, but you can't do it that way. If you just bought the Qs, you've been underperforming, and right now it's at an interesting spot. You look at this channel, or this mid-level channel, it tried to break above it, but again, Apple didn't join the rally on Friday. So here's that mid-level channel on the Qs. If Apple finally gets a little bit of a bounce, perhaps I think the Qs take out this 67, 78, and then maybe tries to test the highs here that were from September. But overall, if you were just in this ETF, this has not been the place to be. But who knows, if we do get a little bit of a bounce in Apple, where some of those mega caps on the Dell deal, perhaps you see some motion there this week.
And oil's been acting well. The OIH is only 1 point away from a major resistance level of 45. So do you think it has enough power to break above it?
I think, again, like we talk about where could flows go. In 2012, the OIHs were very erratic and they didn't have much follow through. So far in 2013, it's been a good place to be. And at this point, it still looks really good. On the micro level, you look at the chart here, you will see really nice entry once it broke above this 41. Since then, continuing higher. If you look here, this also made a higher high from 2013. But then if you go to the monthly chart, you will see that it's approaching some pretty big resistance that I do think it might have the power to break above. So if you look here, this will be a key level. I don't think we take it out right away, but at some point, it could be the second half, or it could be in the next few months, a trade above this 45 or so will open the door for a move to the mid 50s, where it'll see the next resistance, which actually is around 54, 55. So on the monthly chart, I would say the OAHs are looking better.
All right, well, coming up, we're going to go in the trenches with the TBT and TLT. But first, quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
There's been a lot of talk about money coming out of bonds and whether you should short the TLT or go long TBT. Scott, what side of the trade did you end up going with?
I wound up going with the long TBT trade just because it's something I was a little bit more familiar with. But if you look at the overall trade or the overall thesis, it does seem like money's coming out of bonds. I don't know if it explodes, but you have seen downside movement to the TLT as well as upside to the TBT, and the Fed that said they're going to keep rates lower, for an extended period of time. It seems like the market's actually forcing that hand. So if you take a first quick look at the TLT to see how it's looking technically, here is the peak that was put in back in July. And then you had this trend line that started to develop here. This is when it got controlled again, and then really this trade started to break down. Right around here when it broke below the 200-day, you had a gap down. It filled it, but there really was no power. Then it continued to the downside. This was the most recent gap down in the TLT right here, where look, this time it couldn't even come back and fill it, showing you that there was pressure to the downside. And then finally on Friday, it closed on the dead lows. It's rallying, it's up a little bit pre-market, but I would say next spot to add to this thing, if it gets below 115.51, that at some point, within the next month or sooner, it could see the old support here, which is right around 110 to 110.50. So at this point, I think you could stay with that trade to the short side.
Okay, and then taking a closer look at the TBT, which has been inching higher since early January. It's now approaching intermediate resistance level. So what is that key level of support it needs to hold to keep momentum intact?
Well, it did that on Friday. Friday they tried to, on that lukewarm jobs number, where they weren't sure, okay, growth isn't there, so they just sold this. Meanwhile, those shorts got trapped again, and those who were just sitting in their longs, are doing okay. So the question is, can you stay there? And I'm trying to stay there. There are times to be in a bigger tier versus a lighter tier. You look at the chart of the TBT, you will see, ever since the year started, you had a big gap up, and then, it kind of got a little, I would say, methodical or lethargic, so to speak. And then finally, with this downtrend, they gapped above, and this is when I started to get back involved in the trade. And here you go on Fridays, closing near the high. So you have a gap that could be filled here to 70. And some are saying, oh, look at the size of this move. But really, you go to the monthly chart on the TBT, look where we are in relative speaking. So I would not just look to be shorting the TBT. Obviously you have to have a thesis to stay long it, but here we are. I think we take out 70, and at some point this year, if this thesis continues, which I think it can, I think we can get as high as almost 80, if not a little bit above that.
All right, great time for some quick hits here. Let's talk Facebook. We've seen weakness in the stock after earnings. What's that key level it needs to hold on to?
It's funny because, on earnings, you had two chances to buy it. One after hours, it went positive, and then, the next day it was down $1.50 or so, and it went positive again. And then on Friday, it was a little relatively weak. Friday, a lot of us were involved in it. I'm like, okay, let's, trade around it. I think that this has the potential to make new highs at some point. And then it just closed in the lows. And then lo and behold, Barron's has on their cover saying, Facebook is worth even 25. So I know I was getting tweets this weekend, Red Dog, you see Facebook and Barron's? Meanwhile, if you remember, it said Facebook, I think, 15. And if you would have sold it then, based on the Barron's article, you missed a move to 32. So just don't make that your thesis if they're saying it's not true. Let's watch the price action. You go to Facebook right here, and it all depending on your time frame on what you're looking here. I would say that I'd love to see it go positive today because I have a decent amount of it. Overall though, for the whole the macro chart, if it tests the 28 level again, it's not the end of the world. It might be just trickier to hold. Look what happened the last time it reached a peak. For about 2 weeks or almost a month, it had a base. So if you look where it came from and where it is now, overall, I think that let it hold above this 28-ish, go sideways, and I will stay in the thesis that I do not think the highs of Facebook are in for the year. You just have to hold it based on your risk tolerance.
Okay, and obviously no secret that Apple has had trouble finding momentum post earnings and has been out of play for some time now. So are there still nice cash flow opportunities to be found here?
It's hard, especially if you're looking from the long side. I know for me, I've been testing levels, and you haven't gotten more than like a 2-3 day trade without it reversing. And here we are at these lower levels where the pressure's still on. It's been, battered and bruised. And you said, momentum, what about finding a friend? And at this point, I didn't even know, like last night, look at the Super Bowl. You had all these ads, you had all these commercials. I know Apple hasn't done a commercial, but they're not doing anything creative, themselves. Like that Samsung commercial at the end, it's pretty funny. But anyway, you look at the chart here, and you'll see that, we've been in this big downtrend, controlled by it ever since the highs here. We now have this small lower pivot. I'm still taking Apple day by day, and I'm long a little bit, and if we start breaking below 448.35, I'll be out of the way. If it starts breaking above, 460-ish, I think it'll be, interesting just for a trade to see if we can get into this earnings gap, and then, you have this micro pivot here at 483. So I'm just looking for a trade to see if we can clear this. If it breaks below it, I'm out of the way because, if it can't find a commitment or a friend, it's not going to have one of me either.
All right, and LinkedIn has been acting well. It's consolidating above the 8-day now. So would this be a good spot to maybe put some risk on?
Well, it all depends if you want to own it through earnings. And for us, we usually typically don't take stock into earnings. We like to do an option strategy so your risk is premium paid. I am in a call spread for LinkedIn. I like the macro chart. I like being in a new issue that has name recognition and has the opportunity for growth. We talked last year that out of the 3 IPOs that I would choose for to put in the drawer, one was Dunkin' Donuts, which is doing pretty good, Coors, and LinkedIn. So if you go to the chart of LinkedIn, you will see really nice consolidation over the course of the past almost 2 years since it's been public. It's like I think 19 months or so. And here we are at the highs. I don't know if this quarter is going to be the quarter that it gaps up and goes to 140, but I do think at some point this year it's going to do that. For me, I'm taking a call spread, so I know my risk is premium paid. I'd love to see a great report, because if it trades above 127 after hours, I do think there's nothing in its way, and it could see a 135, 140. Let's just hope it's this quarter where I don't lose all my premium and have to try it again next quarter.
And Baidu has been consolidating above its 8 and 21 day for the past 2 weeks. So what's that level it needs to get above to get some momentum?
This one's been very frustrating. Maybe it's just waiting for earnings, and I think earnings could be out after the close today. I'm not 100% sure, so I don't think you should take stock into earnings from the long side or the short side, because a lot of people who went short Netflix into the report thinking, it just had a big move or whatever, they got hurt. If you took a put spread, at least your risk was premium paid. If you did a call spread, you're probably a little upset with Netflix because you got capped. But anyway, Baidu is a type of situation where you could have a really big move one way or another. Maybe I'll trade it after the report. If you look here at the overall stock, it had a nice reversal here in December. There was that red dog reversal where it made a new low and closed above it. And then here we are as it's basing. I know I tried once or twice for this thing to break out, and it kind of hurt. Remember, we talked about if it can get above 112 and stay above it, it could get some momentum. Well, it was a fake out, and that cost us some money. So here's your support. You have 105-ish to 107, big support. And then you have the moving average underneath that. If the report is good, and the guidance is okay, if it starts trading above 115 after hours, you then could see a nice little move, and Baidu always has the capacity to make big ones, so then make sure you know where resistance is across the board. So I think this will be an after hours mover, and if you want to do something with some kind of direction, which I'm not making a bet either way, I think it's a coin flip, just make sure you do it with options, so at least your risk is premium paid.
And Google has, of course, been a bright spot in tech. Google rallied almost 20 points on Friday, put in a new high at 776. So can we expect some continuation this week?
I think that it's going to have to absorb this morning's downgrade, and I think this downgrade is probably a gift. Okay, it's down $5-6. Sometimes it takes a day, sometimes it takes 3 to absorb it. You look at the chart here, it's been a really nice methodical trade. If you guys remember, this was the break above 675 for some swing traders besides this reversal. Since then, it's been methodically going higher. If you did not take stock into earnings, okay, this is where it closed, it gapped up. At least you had a point of reference to trade against, and it's been acting very well since. Gapped above the 740, never filled the gap. In my swing trading class, we talk about how bullish that could be. From there, nice tight flag. Friday had continuation into the close above historic highs. But it's downgraded today, so I would say, go to your 5-minute chart, just say on Google, and see what levels could hold here. And I think that 770-ish is a high level support, but I think if you see 765-ish right around here, this is a good spot to make sure you get back in if you're not involved or you're looking for some type of entry.
All right, and with all of that being said, Scott, where's your focus heading into trading today?
My focus is just seeing if the same speed/composure could continue. We've had this stair-step approach where you've had time to buy things. It's been very stock specific. I've been trying to hold 8 to 15 longs with a hedge, and I don't think that my performance has been top notch because I haven't had the best stocks. I haven't been in some of the refiners or some different groups or even some in the industrials. But at this particular point, it's another month. We could reshift, we could refocus, and we have a long year ahead of us. So for now, I'm going to see if the 8/21 day, which has been a great roadmap, continues to be the device to use. And until that we break and close below there, don't fight this trend. I do think we're going to see higher prices this year. It's just how we get there. So use your tools and tactics to get there.
All right, and thanks for watching, everybody. Have a great Monday. Happy trading.